Welcome to the 5 Dumbest Things on Wall Street, where this week traders will be betting on a different kind of madness, and they'll be watching a totally different bald maniac on TV. Sorry, Jim Cramer. It's Dick Vitale time, baby! All right, number 5. Not so Great Lakes. We didn't have to dig too deep to find the dumbness in Great Lakes Dredge and Dock, now did we? Shareholders of the demolition company didn't have a blast last Friday. The stock sank 18% after it announced it will restate its second and third quarter results due to revenue recognition issues. Basically, the company which makes its money destroying things lit the dynamite, yet forgot to run. Well, that's not entirely true. Great Lakes said its president is taking off in the wake of the, yep, you know, accounting blow-up. Boom! Okay, number 4, Ina's lack of knowledge. Farewell, Ina Drew. You may be a know-nothing, but we hardly knew you. Drew, the former head of the London Whale Trading Unit at J.P. Morgan Chase, blamed traders for the bank's $6 billion loss last Friday before the Senate. Drew resigned from her position as Chief Investment Officer of the bank last May as a result of the scandal. Look on the bright side, Ina. At least you finally learned something about the goings-on in the department you were supposedly overseeing. Even better, you still pocketed $29 million in 2010 and 2011. That's not bad for a warden without the slightest clue that her inmates were running the asylum. All right, number 3. Lulu gets pantsed. Give us some credit, Dumbest fans. Did you really think we would forget about the sheer madness this week at Lululemon? The athletic apparel purveyor announced Monday it was recalling shipments of women's yoga pants with an unacceptably high level of sheerness from its stores. And while Lulu says it plans to see the problem through, the company admitted the issue will indeed impact its bottom line. Shares of the company got pantsed on the news, dropping 3% to $64 on Tuesday. One thing that remains clear for Lululemon, other than its pants of course, is that the once high-flying yoga stock may be a downward-facing dog until they zip this supply problem up. Okay, number 2. Maxwell, not so smart. Bang, bang! Maxwell Technologies is once again dropping the hammer on shareholders. Maxwell shares plunged to $6 after it said its accounting firm was quitting Tuesday. Not that the accountants had a clue as to what was going on at Maxwell anyway. To tell the truth, nobody did, especially the analysts who upgraded the stock in February. The shares popped to nearly $11 on the upgrades, a year-to-date high, and then clang, clang. That's a Beatles reference. I don't know if the kids today know the Beatles. Anyway, that's a very dumb thing. And the dumbest thing on Wall Street this week, Cyprus silliness. Russian leaders hit the roof over the EU's plan to tax bank deposits as part of its bailout package. President Vladimir Putin called the move, quote, unfair, unprofessional, and dangerous. Russian gangsters with money in Cypriot banks were less worried, however. In fact, we overheard one saying, we can settle this over cocktails. Make mine a Molotov. There you have it, the 5 dumbest things on Wall Street this week. We'll see you next week, but for now, thanks for watching.